Hi, my name is Mark Russell. I'm a financial wellness board member with National Debt Relief. I have over a decade of experience working in the financial services world, and it's my goal to make very complex financial concepts that you hear every day easy so you can transform your financial life. In today's video, I want to talk with you guys about credit card debt consolidation loans. If you are, for whatever reason, struggling with credit card debt, this type of loan could help you get rid of your debts in a multitude of different ways. First, it could make your debts more manageable. And secondly, it could shorten your payoff time if you get a lower interest rate on your consolidation than the average interest rate of your credit cards. Although it could potentially be a powerful solution, you may have a few questions about it. Maybe you're wondering what a credit card consolidation loan is exactly. You might be asking, what types of consolidation loans are there out there? You might be asking, what are some of the pros and cons? And then also, how does this impact my credit score? These are just a few questions that you may have regarding credit card debt consolidation loans. And it's my goal to answer every single one of your questions in today's video. Oh, and at the end of the video, I'll give you a few tips on how to make debt consolidation work for you in your unique situation too. Are you ready? Great. Buckle up. Let's get started. First up, what is a credit card debt consolidation loan? Essentially, a credit card debt consolidation loan is a loan that will help you consolidate your outstanding credit card debt into one single loan. On one hand, this could help you financially by lowering your monthly payments and interest rates if you get a lower interest rate on your consolidation loan than your current outstanding debt. If you manage to get this lower rate on your consolidation loan, it helps you by saving money on interest, and that can expedite your debt-free journey. On the other hand, it could help you by simplifying your debt management. After all, by consolidating your debt into one loan, you're left with only one repayment instead of multiple. Let's give an example. Let's say you have 5 credit cards, each with an outstanding balance of $5,000. You'll then get a consolidation loan of $25,000, which you will use to pay off these outstanding balances all at once. Then you're left with one loan of $25,000, which you will repay over time. Again, if you manage to get a lower interest rate on your debt consolidation loan than the average interest rate of your outstanding debts, and you can comfortably make the repayments within your budget, it could be a smart move. And the higher your credit score, the more options that you have. So if your credit score is pretty good, using a debt consolidation loan could greatly help you in your journey of becoming debt-free. There are many types of debt consolidation loans. If we look specifically at credit cards, one type of loan you could use is a credit card balance transfer. The best balance transfer cards often come with a 0 to very low interest for an introductory period of up to 18 months. The idea is to pay the balance on your high interest credit cards with the money on your balance transfer card. But here's what you want to pay attention to. You want to make sure that you're paying off the entire balance before the promotional introductory period ends. However, please know, if you can't make your payments on time within that introductory period, you could end up racking up more debt than what you started off with. So please be careful here. Another type of loan that you can use to consolidate debt is a home equity line of credit, or what they call a HELOC. Your home equity is the difference between the appraised value of your home and the total outstanding balance on your mortgage. If you have enough homeowner equity and a good credit history, you can borrow some of that equity, which you can use as a consolidation loan. Another type of loan that you can use as a consolidation loan, and probably the most well-known, is the good old personal loan, which you can obtain from banks, credit unions, or online lenders. These loans are usually unsecured with fixed interest rates and repayment terms. Now, the interest rate depends on your credit score, but it's often a bit higher than a HELOC loan. If you don't happen to have a significant equity in your home and your credit score is good enough for you to secure a relatively low interest rate, getting a personal loan as a consolidation loan could be the way to go for you. But remember, with any type of consolidation loan, there are things to look out for. Making your payments on time and not racking up new debt are the most important things to look out for. If you can't make the payment on time and you're tempted into taking on more debt, you may end up in a worse situation than what you started with. So of course, we want to avoid that at all costs. Whether going the credit card debt consolidation route is a good path for you truly depends on your unique situation. Let's talk about the general pros and cons that are associated with credit card debt consolidation. First, the pros. It could potentially get you a lower interest rate, which could save you money on interest. It could also help you pay down your debt faster, which depend on your specific consolidation loan terms. It can also streamline your whole debt management process because you're going from multiple payments to just one, which can make it easier to manage. Let's talk about the other side of the story, some of the cons. Taking out a debt consolidation loan could result in another credit check on your credit report, which may lower your credit score temporarily. And it might come along along with upfront fees and costs that typically come with a new loan. And it's only truly beneficial if you get a lower interest rate on your debt consolidation loan than the average interest rate on your credit cards. However, while your credit score might take a temporary dip, if you take out a consolidation loan because of the hard credit check, it may boost your credit score eventually if you make your payments on time. That's because your payment history is the most important factor when calculating your credit score. But while debt consolidation may help you in a multitude of different ways, remember that debt consolidation won't solve your financial problems on its own. Getting your debts consolidated into one loan and having a clean slate with your credit cards could make it tempting for you to start using credit cards again, which, believe me, is one of the hardest things to avoid. The way to solve your financial problems is by making your budget work for you and keeping your spending in check and having sound financial habits. You can learn more about this on the other videos in the series or in this blog on National Debt Relief's website. Now that you know what a debt consolidation loan is and how it may help you, you might want to gauge whether it's a right fit for you. And this may be an opportunity to talk to a professional debt expert. They can help you by going through your current situation and checking whether debt consolidation is a smart move for you. Generally speaking, debt consolidation could be a good fit for you if your credit score is good enough, which means that you have a higher chance of securing a lower interest rate on your debt consolidation loan than the average of your current credit cards. It could also be a good fit if you preferred fixed payments, or if you want one monthly payment instead of having multiple payments. And probably more importantly, you can afford to repay back the loan. Because if you're not 100% sure if you can afford the new consolidation loan, you'll risk going into even more debt. So you believe it's a match? Great. Then you might want to go and look for a lender. Please know that there are debt experts and debt relief companies that can help you with this. But you want to go through the process by yourself. Here are 5 powerful tips to make debt consolidation work for you. Number 1, check the loan amount ranges. The loan amount needs to be able to cover your outstanding debts, of course. Check how much you need to consolidate and find a lender that can give you the appropriate amount. Number 2, learn about the approval requirements of the loan provider and see if you meet these requirements. This may include your credit score, your debt to income ratio, and income. And number 3, review interest rates on different loans and different lenders. The interest rate on your debt consolidation loan needs to be lower than the average interest rate on your current debt for it all to make sense. Number 4, look out for fees. Always read the fine print on the loan terms and conditions. And number 5, compare the payment on different loan terms and check to see if it fits within your budget. And the last and most important tip of them all is to try not to add any new debt while you're repaying a consolidation loan. Debt consolidation is a tool to manage existing debt, not a free pass to take on more. Resist the urge to use credit cards or take out new loans. Rather, focus on sticking to your budget and prioritizing your debt consolidation payments to improve your odds of being successful and becoming debt-free. We know it may be hard, especially if you find yourself dealing with something that might come up that's unexpected, like your car breaking down, a medical emergency, or losing your job. But know that there are ways to prepare for circumstances like this, rather than taking on new debt. For example, check out this blog on how you can prepare for anything unexpected with an emergency fund. I hope by now all questions you had before watching this video regarding credit card debt consolidation loans were answered. And if not, feel free to put your questions in the comments and we'll go through them all and make sure that we get back to you ASAP. And remember, if you find yourself struggling with credit card debt and looking for help along the journey of becoming debt-free, debt relief companies like National Debt Relief are here to help. If you have any questions or would like a free, no obligation debt relief consolidation call, visit their website at nationaldebtrelief.com. If you happen to have other financial questions, please check out the other videos in this series on National Debt Relief's YouTube channel. It's our goal to make complex financial concepts that you hear every single day. We want to make them easy so you can transform your financial life. Thanks for watching, and we'll see you on the next video.